Freedom isn't a number. It's not 1 million. It's not 10 million. It's when your passive income covers your life. Most people know how much they make. Almost no one knows how much they spend. What's the gap? It is time to get ready for some massive discounts in the real estate market. Today at 4 p.m. Pacific, we actually have a premiere episode of One Rental at a Time, where I interview Ken McElroy and his lovely wife, Danielle. We talk about all things real estate, both residential and commercial, and just give you a taste on the epic collapse that is coming to a particular asset type. I'm going to relay a story that Ken shared in the video. Ken talked about a particular property that was purchased in Texas for $40 million. This particular asset had $15 million invested from limited partners, and the debt was $25 million. Now, this property is clearly not performing. I think he said it's 60% occupied, so 40% vacant, all kinds of problems. At the end of the day, the bank has taken back this asset. The bank called Ken and gave Ken an opportunity to buy the property. Now, here's the deal. What do you think the bank offered? Again, remember, it was purchased for $40 million. It had debt. The bank was on the hook for $25 million. The asset is non-financeable, right? It is 40% vacant and in bad shape. Do you think the bank offered it for the debt? Do you think the bank offered it maybe for $30 million, right? Take a $10 million haircut off the LPs and the bank is whole? Absolutely not. What the bank offered it to Ken McElroy and his team was $14 million. I'll say that again. An asset bought for 40, had $25 million in debt, was offered for sale at $14 million. Folks, that is nearly a 70% discount. 70. Now, we talk about a lot of things in this premiere episode. Again, set your watch for 4 p.m. We talked a lot about Class A multifamily, which is trading. That is when we went into Class B and Class C. You have heard me talk endlessly about the fact that Class A has had a 20 to 25% drop, and that I thought Class B and Class C would have at least a 40% drop. Ken McElroy has been doing this a long, long time in multifamily, and he agreed. He indicated that there is lots of pain, just like this opportunity out there. Banks are sitting on massive losses, and that LPs are completely wiped out in a lot of these deals. So again, some opportunity coming. He does put some time frames on them, so you'll want to tune in for that. Also, to give you a little highlight of Danielle. Danielle actually just did a very important 1031 exchange. She got out of an HOA condo into a single family home. Great strategic move. She talks about that. We talk about the market uncertainty and where real estate is going. But again, as we started this episode, there are going to be some massive discounts coming to Class B and Class C multifamily. The fact that cap rates got so compressed, the LP money is completely gone, and banks are sitting on massive losses. Tune into that episode today at 4 p.m. Pacific. You will not want to miss it. It is one of those that will help you get in the right direction. So shout out Ken and Danielle for giving us nearly an hour yesterday. It was greatly appreciated. The last thing I'll say about that interview, at one point, Ken shocked me. I don't get shocked very often, but Ken shocked me. And again, it just shows how good he is at what he does. He actually indicated that, Michael, I'm actually building. I'm doing ground up building right now. So we talk about that a lot in the episode. Why is he doing that? What does he see in the future? When does this product land? And frankly, it made a lot of sense to me. So again, tune in. Ken McElroy, his wife, Danielle, 4 p.m. Pacific. You won't want to miss it. Saw an interesting post from Resi Club. Lance Lambert, the amazing Lance Lambert, talked about Toll Brothers CEO. I don't know if you guys know this, but the housing market, right, builders, home builders, has been through an acquisition phase, but they were really buying the small and medium builders. In fact, Toll Brothers, for example, has bought 15 builders in the last 30 years. According to the CEO of Toll Brothers, we expect mergers between public home builders. So again, you could think KB Homes, Lennar, Toll Brothers, the list goes on and on. I actually wonder if the home building industry is going to turn out like the auto industry, right? The auto industry for the longest time has been known as the big three. I wonder if home building is going to go that direction as well. Again, according to the CEO, the next round of acquisitions in that space will be public companies buying other public companies. We got an update from the New York Fed on just how much uncertainty in the consumer is feeling better. Again, remember, folks, it was 2 or 3 weeks ago, I postulated that we were past the worst of the uncertainty and that the soft data would start to show that. Well, we've got more of that data here. New York Fed report said customer outlook on the job market has improved. Expectations for food prices rising has improved. Home price expectations have improved. So again, generally speaking, the consumers are feeling better and better. Looks like Disney is out dropping some serious coin. They are paying a Comcast $438 million, just over $438 million, for full control of Hulu. It'll be interesting to see what Disney's plan is for Hulu once they have full control. And let's put up this comment from a fan. Yes, hit that like button. We've got 98 folks watching at the moment. Thank you all for being here. You're amazing. I appreciate the support each and every morning. Thank you, thank you, thank you for that. I appreciate it. Another sign that the uncertainty is passing us, we just got a CEO survey. 270 CEOs were surveyed, and expectations for a recession have significantly declined. This was a June report. If you remember back in April, over 60%, 62%, if memory serves, CEOs thought we would have a recession in the next 6 months. Now, less than 30. Again, as every day goes by and uncertainty gets just a little bit better, we are starting to see that improvement. So again, greater than 60% of people saw a recession in April. Now in June, less than 30. That is a significant adjustment. Home Depot CEO in that report said the worst concerns from the tariffs have passed. Remember, Liberation Day was all about these wild and crazy called tariffs, but they were just trade imbalances. And that now has passed, so the uncertainty is getting better and better. Also read this morning that the negotiations with China in London is continuing. I can only assume that more talk is good. They haven't left the table, so hopefully there is resolution there. Folks, tomorrow is going to be a big day. If you are out there hoping for a rate cut in 2025, you must be paying attention tomorrow. Tomorrow we get CPI. CPI last month headline was 2.3, core was 2.8. It is now expected in the most updated numbers that the headline is going to rise to 2.4. I actually think there's a chance it might go to 2.5, but again, we will see what happens tomorrow. Core is also expected to rise from 2.8 to 2.9. Remember, folks, we have been warning you about the next 3 months for 6 months, and now we are here. The next 3 months, it is going to look like, I think, inflation is increasing, and it has a chance to significantly increase should the tariffs start to bite significantly. So tomorrow is a very, very important day. We are getting some expectations on Americans, consumers. Inflation fears are easing. Again, as I've said for weeks now, it looks like the uncertainty is starting to pull back from these high numbers. Inflation expectation a month ago was 3.6. It is now 3.2. Paramount came out and announced a workforce reduction. Looks like Paramount is cutting 3% of their workforce as they adjust cost cuts more significantly. Got a report that home investors, that's you and me, folks, investors are selling at our highest rate ever. At least back to 2011, that's when this report was put together. Looks like 11% of all home sales are investors. Now, I find it interesting that the doomers and crash bros are all selling this as negative, but I'm confused. I thought it was negative when investors bought it, but now it's negative when investors sell it. Guys, you can't have your cake and eat it too. Have an opinion. Don't just say everything is bad because everything is bad. That's just wild. At the end of the day, I think what's happening inside this 11% is, I'm guessing, again, I did not look at the numbers, that we had a lot of people jump into the Airbnb short-term, mid-term rental space, and they found out that that is not for them. Folks, that is a hospitality business. It can be an amazing business model, but please, it is a hospitality business. It is not passive. It is anything but passive. But yes, that is a fact, that it looks like 11% of all home sales are investors, which is interesting. Looks like rate cuts around the world are going to continue. Looks like the market expects the Fed, or Bank of England, I almost said the Fed, my mistake, Bank of England, to have 2 more rate cuts this year. Pretty wild, 2 more rate cuts. As for the U.S., economists are still expecting 2 rate cuts in 2025, with the first rate cut in September. Folks, I have to tell you, I think that's a little early. I think if we get a rate cut at all in 25, it will be December. Why is September too early for me? Because again, remember what I've said for 6 months. I think the next 3 months, inflation will be going up. So that's going to be June, July, and August. You're going to have 3 months in a row, because of the base effect, where inflation is up. And you're telling me that the Fed's going to cut in September? Call me suspicious. That doesn't feel right. We did get one economic report today. That was the NFIB report. Think small business. As expected, it went up, but it went up more than expected. Again, small business was dramatically impacted by Liberation Day, shock and awe, crazy tariffs, where the last report came in at 95.8, was expected to get a little bit better to 96, and it actually came in at 98.8, so a significant improvement. I do want to read one more thing. This was a quote. I pulled it up. Let me pull it up in my pictures, or a tweet. I'm sorry, a tweet from Ken McElroy the other day. I thought it was really important. Here we go. Freedom isn't a number. It's not 1 million. It's not 10 million. It's when your passive income covers your life. Most people know how much they make. Almost no one knows how much they spend. What's the gap? Folks, that's what I've been talking about for a long time. You heard me talk about it at Deal Champs. There's some IG reels of me on stage talking about it. You need to figure out what your life costs. How much does it cost each month to live your life? I suggest, if you are open to it, make it a family experience. If you have kids over 10, do the following. Get with the family and say, okay, folks, I'm going to ask you some questions. What does our life cost today? Right? I'm going to make up some numbers, $5,000. Then I would do the following. What is the bare minimum? What if we had to cut back and just do what we need, not what we want? Maybe after some conversations, you figure out it's $3,500. And then the fun happens. Then you can have the family talk about what is the most amazing life you can imagine, right? Do you fly first or do you fly private? Do you have 1, 2, or 3 homes? How many cars do we have? What is the ball out lifestyle? Let's call it 20 grand. Now, folks, you have a North Star, and you actually have the steps on the path. Your first step is to build passive income to $3,500 because that's the bare minimum. Then you're going to get to 5 grand. And then if you want, you can get to 20. But at the end of the day, as Coach Carson always reminds us, what is enough? What is enough? There you go, folks. Get in the game, figure out what's going on. Again, tune in to Ken McElroy and Daniil McElroy's conversation. You won't be disappointed. There are massive discounts coming in the real estate market. He talks about what you should do, how to get ready, and I hope you enjoy it. Let me know in the comments when you watch Ken's video. Let me know what you think, questions to ask. Hopefully, I'll be talking to him again shortly. So if you have questions that you want to ask Ken, put it in the comments. I'll make some notes. Take care. Later.